Okay, let's unpack this. If you work anywhere in the world of finance, compliance, payments, trading, or crypto, the feeling of just drowning in alerts, that constant crushing pressure to find the one illicit transaction, that one piece of fraud, the money laundering pattern hidden in, millions of digital data points, that pressure is what keeps the global financial system honest. But wow, it's a tremendous workload.
It really is. And the essential regulatory tool we rely on to communicate that dishonesty is the Suspicious Activity Report, or SAR. For any financial institution, whether you are a global bank or a fast-moving digital asset exchange, SARs are, well, they're the cornerstone of compliance. The problem is, drafting them is notoriously slow, incredibly repetitive, and it just sucks up a huge amount of highly skilled resource time.
Exactly. We're talking about high volume and incredibly high stakes.
Yeah.
I mean, think about the compliance crunch that banks are facing right now. They handle millions of transactions a day,
Per day.
which generates thousands of potential alerts that have to be screened. They face these strict regulatory deadlines, and yet there is a serious global shortage of skilled investigators.
It truly is a crisis of capacity. Our source material for this highlights just how much this challenge has accelerated over the last few years. SAR filings have increased by more than 40% over the last 5 years alone.
40%.
That jump is driven by the sheer scale of global digital transactions and, unfortunately, increasingly sophisticated fraud schemes that cross platforms and borders instantly.
So the human analyst is just overwhelmed by volume, not necessarily complexity. And that's precisely why we're undertaking this deep dive. Our mission today is to explore how advanced natural language models, AI, are fundamentally changing the efficiency and the intelligence of SAR drafting. This is not about AI replacing humans, this is about augmentation. We're exploring how these systems act as expert assistants, providing a massive instantaneous shortcut to intelligence and structure for the compliance analysts on the front lines.
Right. And to appreciate the impact, we first need to look at the process. We need to understand how an AI system takes a single alert and turns it into a regulatory-ready draft.
Let's start at the very beginning then. Walk us through the workflow from the moment an alert fires to the moment the analyst sees the finished first draft.
Absolutely. So modern AI systems are designed to operate right within the institution's existing case management environment. They perform three core tasks that, save the analyst the most time. The first is pure heavy lifting, data consolidation. The AI automatically ingests diverse and often very messy sources to create a structured case file.
So if I'm an analyst, instead of manually opening 20 different tabs and databases, the AI is pulling all the necessary evidence together for me.
That's the entire goal. The system pulls in the initial transaction monitoring alerts, the customer's entire Know Your Customer or KYC profile, all the account and entity relationships, their full transaction history over a set period. And critically, any prior analyst notes or past SAR filings related to that customer. It synthesizes all of that information and summarizes the essential facts, presenting them chronologically.
That initial assembly phase must eliminate a massive chunk of cognitive fatigue.
Mm.
Okay, so once the data is consolidated and structured, the system moves into its analytical task.
That's task two, risk pattern recognition. This is where the machine learning models truly demonstrate their expertise. They rapidly identify specific known financial crime typologies. We're talking about things like structuring, which in the compliance world we sometimes call smurfing,
Smurfing.
or the rapid movement of funds between accounts, which is the layering stage of money laundering.
Hold on, for a listener who might not be a career compliance officer, can you quickly paint a picture of what smurfing or structuring looks like in, a modern digital context?
Certainly. Structuring is simply breaking up one large suspicious transaction into many smaller, less suspicious ones, usually just below a mandatory reporting threshold.
Ah.
So imagine trying to wash, say, $100,000 by depositing $3,000 at a time repeatedly.
Got it.
And layering is the rapid, complex movement of those funds through multiple accounts and jurisdictions to obscure the trail, making it extremely difficult for a human to follow without specialized tools.
That makes perfect sense. And the AI is flagging those indicators instantly.
Precisely. It also identifies niche, very specific indicators, like transactions involving known high-risk jurisdictions, or specific patterns that indicate mule behavior in retail banking, where someone is paid to move illicit funds, or fraud-linked credits immediately followed by aggressive cash withdrawals. The important part here is that the AI flags these patterns with explainable indicators, so the human analyst knows exactly why the system drew that conclusion, not just that it drew one.
And that explainability is huge for regulatory defensibility. So the data is pulled, The pattern is recognized, and that leads us to task 3, narrative generation.
This is the final output. Using controlled prompts and adhering to very strict compliance rules, because regulatory language is specific and standardized, the system drafts a professional initial SAR narrative. This draft must be chronological, backed by explicit evidence, and absolutely free from any analyst speculation or conjecture. It's written in the regulator expected format, but the crucial point is that it is fully editable and ultimately approved by the human analyst.
So the value proposition here is essentially instant expertise. The AI handles the repetitive, time-consuming assembly and the regulatory structure of the report. Institutions are finding that this process delivers a professional first draft that might have taken a skilled human analyst, 30 to 60 minutes to write manually?
At least. And that time saving is a massive strategic advantage. It shifts the analyst's role away from being a glorified data assembler and report writer and back toward being a true investigator focused on judgment and complexity.
Now, let's see this in action. The real test is, what happens when we put this into practice? Let's look at some real-world examples that illustrate the aha moment of the AI connecting dots that human analysts might miss simply due to, well, the sheer volume and cognitive load they are processing.
The first case highlights a classic retail banking problem that perfectly illustrates structuring, we'll call it, structuring across multiple branches.
Okay, take us through the scenario and the challenge it presented to the bank.
So a major retail bank customer triggered 18 minor individual alerts over 3 weeks. Crucially, when you viewed them in isolation, each one seemed pretty harmless. It was a deposit of cash, just small enough to avoid mandatory reporting thresholds. A human analyst working on a queue might only see 1 or 2 of those alerts at a time.
Right.
The AI automatically consolidated all 18 alerts into a single investigation file.
And what did the AI see that the individual alerts obscured?
It immediately identified the pattern. All 18 deposits were consistently just below the reporting threshold. They occurred across 5 different branches in 2 different cities, suggesting a deliberate attempt to disperse the activity. And critically, the funds were always transferred out to a third party within 24 hours of being deposited.
That's the key piece, isn't it? The AI takes 18 minor data points and instantly creates a single aggregated high-risk narrative. For an investigator, that eliminates the soul-crushing work of manually searching for and cross-referencing all 18 of those separate tickets.
Exactly. The AI-generated SAR draft reconstructed a clear, damning timeline. Listen to the strength of the opening summary it produced, which gave immediate actionable intelligence. It said, between 4 March and 25 March, the customer conducted 18 cash deposits totaling USD 74,500 across 5 branches. Activity is inconsistent with the customer's stated profile as a part-time delivery driver earning approximately USD 24,000 annually.
That level of detail and contextualization delivered automatically it's powerful. Institutions reported a 70% reduction in SAR drafting time in cases like this because the analyst wasn't searching for the connections. They were reviewing a complete case.
Now let's pivot to the digital asset space for Case B rapid layering at a crypto exchange. Here, the complexity just explodes because of the multi-hop, cross-chain nature of crypto transactions.
Right, so the scenario involved unusual movements between stable coins and rapid conversions on a digital asset exchange.
Yeah.
A perfect setup for money laundering.
Exactly. And the AI's greatest contribution here was mapping the complex transaction flows across multiple wallets in seconds. It flagged connections to jurisdictions known for limited anti-money laundering oversight. But the critical piece of insight was the cross-case contextualization. The AI summarized that one of the involved wallets had historical prior alerts linking it to a ransomware typology.
So the AI not only tracked the current flow, which is a huge task in crypto, but it tied it back to historical high-risk criminal behaviors that might have been buried in archived files.
It captured this complexity so succinctly. The AI narrative example noted something like, Wallet A received USD 112,000 equivalent from 4 unrelated wallets, followed by rapid conversions into privacy assets and dispersal into 12 destination wallets located in jurisdictions with elevated ML risk scores. It standardized the output, delivering a faster understanding of multi-hop transactions and ensuring consistent use of regulatory typology language.
Okay, finally, Casey, dealing with trade-based money laundering, or TBML, involving a corporate account. This is notoriously harder to detect because the illicit activity is hidden within legitimate trade documents.
Correct. This scenario involved a logistics company receiving large payments from new counterparties that raised alerts at a mid-sized bank. The AI review focused on three significant indicators that, when combined, were highly suspicious.
And what were those three red flags that the AI synthesized?
First, incoming wires originated from countries completely unrelated to the logistics company's declared shipping routes.
Okay, that's a big one.
Second, the payment descriptions referenced vague consulting services, which is obviously inconsistent with cargo operations. And third, the outgoing payments went to shell-like entities identified via corporate registry analysis.
So instead of a human analyst having to manually compare payment descriptions against the company's stated business purpose and then cross-check external registries, the AI performed that initial comparative analysis.
Exactly. The AI provided the initial structure and language consistent with Financial Action Task Force, or FATF, TBML typologies, allowing the human analyst to bypass the tedious data assembly and immediately focus on deeper investigative review.
The aggregate impact across all three of these case types is just huge. Let's shift our focus now to the operational advantages and, crucially, the necessary regulatory guardrails that make this system safe.
When deployed responsibly, institutions are reporting huge operational gains. We've already covered speed. Reported reductions range from 40% up to 80% in drafting time for analysts. That leads to a much faster SAR turnaround, which is key for timely law enforcement intervention.
That efficiency gain is obvious. But you mentioned quality control, too. Why would the AI narrative tend to be higher quality than a human narrative?
Well, because the AI enforces a structured, regulator-friendly format every single time. This drastically reduces what institutions often call rambling narratives and ensures consistency. It guarantees that the explanation of the suspicious behavior is adequate, evidence is cited correctly, and no key facts are accidentally missed.
And it offers better risk interpretation by highlighting those cross-alert multi-jurisdiction connections that a human, staring at one screen, might easily overlook due to scale. Plus, the audit trail is stronger version history, and explicit evidence trails mean regulatory defensibility is significantly improved.
What's fascinating here is that the benefits are entirely dependent on responsible deployment and strict governance. It's imperative that institutions treat the AI as an assistant, not as a replacement for human judgment.
That human element remains vital. So if I'm a regulator, what are the key guardrails I want to see in place when an institution relies on these AI models?
The foundational rule is that AI should draft the SAR, but only a trained human analyst must always validate and approve the content and actually file the SAR. Beyond that, the governance checklist is pretty clear. First, data protection. SAR data is highly sensitive, and the system must ensure that data never leaves controlled environments.
And the second point addresses trust in the machine, which I'd imagine is critical in a regulated industry.
Precisely. That's explainability. You cannot use a black box in regulatory compliance. Institutions must meticulously document exactly how the AI model works, what data it uses to reach a conclusion, and the specific prompts and rules that govern its narrative behavior. If a regulator asks, "Why did you file this SAR?" the human analyst must be able to defend the AI's conclusion with complete transparency.
That makes perfect sense. If you can't explain the conclusion, you can't defend the filing.
Exactly. And finally, there is quality assurance. This demands periodic reviews to ensure the AI outputs remain accurate, unbiased, and continue to align with evolving regulatory expectations. This prevents the system from drifting over time and starting to produce lower quality, less effective reports.
This sounds like a robust system that balances unprecedented efficiency with the necessary human judgment and governance. Now let's look forward. If we connect this to the bigger picture, the source material suggests AI's role is evolving rapidly toward full case intelligence beyond just simple drafting. What's the next innovation we should expect?
Well, Section 4, the future of case intelligence paints a really exciting roadmap. One immediate possibility is automatic typology detection models capable of classifying cases into precise FATF categories, automating even more of the initial assessment phase, and improving data quality for regulator.
And this leads to smarter workload prioritization, right?
Yes, through predictive escalation guidance, the AI could estimate which alerts, based on the consolidated data and detected patterns, are most likely to result in a mandatory SAR filing. This guides analysts to prioritize the highest risk workloads efficiently, which is just critical when capacity is limited. We'll also see SAR quality benchmarking, comparing institutional SARs against anonymized, industry-wide, high-quality examples to create a continuous feedback loop for improvement.
That sounds like an entire compliance team getting smarter instantly. But perhaps the most crucial development mentioned in the source is the potential for cross-institutional intelligence. That sounds like a pretty radical idea for institutions that are traditionally so fiercely protective of their data.
It is a game changer. It leverages privacy-preserving technologies like federated learning. This allows banks to share risk insights about typologies and patterns, for example, a new smurfing technique or a novel ransomware payout method without ever sharing specific customer data or violating privacy. This would allow the entire financial ecosystem to defend itself against evolving crime in a coordinated, unified way.
So what does this all mean for the financial institutions and for the analysts on the front lines? AI-driven SAR drafting is one of the most practical and impactful applications of AI in finance today. It's not just accelerating the process, it's profoundly amplifying investigative insight by linking disparate alerts and providing that critical, regulator-ready narrative structure instantly.
The final takeaway here is that the future is not just automation, it's intelligent augmentation. It frees up compliance analysts to shift their focus away from repetitive data assembly and narrative structure, allowing them to truly focus on understanding complex risk, protecting the financial system, and providing law enforcement with clear, high-quality, actionable intelligence.
Which raises an important question for you, the listener, to mull over. If AI is already capable of spotting complex layering and structuring patterns this effectively, how quickly will sophisticated criminal networks adapt their tactics, forcing compliance systems to rely even more heavily on AI-driven predictive intelligence just to stay one step ahead in this evolving arms race?